Well, hello members, this is another in the continuing series of cradle-to-grave trades. We're going to look at two of them that we looked at last time, Equifax and gold, but we're also going to circle back to XLV. If you remember, we pushed that out. I gave you an explanation of why. I'm just going to circle back to it and talk about it a little bit as well. So what do we got here? Equifax comes out with earnings, right? Sells down on earnings. That bar, or at least the earnings bar, is the bar that you see here with the volume expansion, right? So that's this bar. So as it trades back into it here, the sellers come out, they push it back down. You're setting up the potential for an ABCD structure to the downside. So let's take that assumption, right, that we may get an ABCD structure. It goes back up to here. Now it push you back into there. The breakout was on this bar. On the original push, then back down, and then it breaks out again or pushes back over again. And so the retest regen the next time down it's not really a clean one anymore, even though it's this area, because you'd already traded under that, right, and then got the push back up. So Equifax, even though this ABCD structure would push into this area, back into this bar, it's not really a clean retest regen from the perspective that that already has been disqualified by this push down. So what do we have? Well, let's go to the weekly and see what we have there. Now the weekly, it's a different story, right? Because this breakout on this bar was tested. So if we go back to here, was tested once already. You can see the test in this area here, and then you get to move up, right? Pull back, move up. And so if we do the ABCD structures here and ask ourselves, what do we have, right? That A point is in this area, and we don't have a B point in here, anywhere in there. If we keep going up, our B point's way up here. And so our B point is at that price point there, and then we have a nice long move up above, right? And of course it's pulling back now, so it's a little bit of a different story. What else do we have on this time frame? Well, we actually have volume at the top. We got over this high, and we have volume on that push. That's a good thing in that we could go back up there again. The bad thing, as we saw already on the daily, is that that was pushing to the downside. So even though we could get another test up here, it's not as clean as it used to be. Where do we have support? Well, you've got this wide price spread bar, so that's going to be the support on the way back down. If you draw it over, if you take this low, that price point is 129.11. If you take this high, it's 129.27. So the 11 to 27 area is going to be the key area on the way back down. We're going to watch that carefully and decide if this stock is really done or not. I don't think it is, but we don't know that. We have a place to measure it. That's the bars of significance on the way back. That's where we want to see the test, and that's where we're going to make a decision about what that test tells us. Again, if you're looking at the volumes so far, you had 3.9 on a weekly. On the test back in the first time is 3.4. When this comes back in again, which it looks like it's probably going to try, you don't want to see more than about 3.4, 3 million, something of that nature. You don't want to see it expand to 4, 5, 6 million. And so that's the sort of thing you're looking for on that test. So right now the jury's out. We did buy some on this retrace, got a good entry point. We didn't push it back out yet though, and so we're going to have to decide what to do with that as it comes back in. Let's take a look at gold next. If we look at gold, so here we go with the gold charts. So gold has had, quite an interesting run. A lot of push up, a lot of push down. Now we got the push down going on. Volume comes out of it on that employment number on Friday, pushes down, gaps down, matter of fact, and it actually gapped right into the same area that it gapped before. Volume on that push down, a lot more than volume on this one. That's kind of a good sign. As we come into that low, I'll be curious to see what it does there. Plus, if we go back to here, this high volume bar is right in that area as well. So we're coming right into the price point where, if I was a buyer or if I was someone who wanted to buy, already had someone to add, or wanted to start a new position, this would be the area that I'd be looking at. So that's where I expect sellers to dissipate and buyers to come back to life. If not there, then it's down at this price point, and as we've already seen once before, that is in fact what happened last time. So we've got 2 points, the higher one, the lower one. We'll just have to measure them as it comes back in and decide if and when to add. If I look at it on a weekly, you know, we've got a nice push up on volume, 4 bars weekly, 4 bars on the upside here, the top having volume as well. All of that's great. That means that we're probably going to get back up there before it's over. As far as what can it do in between, right, this thing can trade back down into this area. It's already done it once. It can certainly do it again. As a matter of fact, that breakout here, the retest regen, was tested once, got under it, and then back into it. I usually give it a little slack if it breaks under at 1 bar and can't stay there. That's what happened, and then we got the push up, as you can see. If we come back into this area, I won't be exactly happy, but it's possible it could do that. We've got this big bar over here. That price point's right into that area. So if we do trade that low, then that's where I'd be looking. If you're looking at gold on a long-term basis, you know, intermediate to long-term, which is what I'm doing, I've got to give it enough slack to allow these kinds of things to happen and be able to position myself to buy more. And that's the way you should be looking at it as well, because that really is the way I'm trying to trade this. I want this for the long term. Why is that? Well, because in the long term, this thing has a turn. And when I say it has a turn, I've gone over this before, but I'll do it again for the benefit of those of you who are looking first time. You got the break over it with volume here. That was the bearish retest regenerate. It holds that level, right? And then it gets another push, gets over a swing point high. So now what does it have potentially? It has a bullish retest regenerate. How deep could it go? It could come all the way back to the low of this bar. Would I like to see that? No, I really don't want to see it trading at 112 again. Do I think that's going to happen? Probably not. I think about 121, the top of this bar, 120.84, is probably as deep as this thing probably should get. Worst case, I would say maybe 115, but I think that's an outside shot. If this is a long-term bull turn, in other words, if this thing really has rolled over finally, right, you can expect one more retrace in here somewhere, deep one. It's going to throw everybody back out. Is that now? It may be. Is it later? We don't know. What we do know is that historically those kinds of things happen. In other words, when you're getting the long-term turn, many times you'll see the big push, and then you'll see them shake all the weekends back out before taking it back up again. And so beware of that. That's certainly a possibility. We can't lose sight of that on a longer term basis. Finally, I'm going to go back and look at that XLV. Now, XLV we had talked about, and we had actually bought into it back here on this breakout. And I think it was on the weekly. Let's look at the weekly first. Yeah, it was on this breakout that we bought it. And so what we did is we bought on the weekly on the breakout of these 3 swing point highs. And typically what you should get is you should get 2 to 3 bars extension off that breakout. In this case, we actually got 4. Got as high as 76. Now, I pushed it back out, and if I go back to the daily chart, I pushed it back out long before then, though, because I didn't like the way it was behaving, and it looked to me like it was going to come back in, and that was in this area here. I got a little anxious. It looked like it was the right trade initially. In other words, I pushed it out. It started to roll over. I was thinking, wow, that was a pretty good trade. I'll be able to get back in here on this retest and then regen. And then what happens? It pushes up and up and up, right? Now it's coming back in. We'll still probably get it back here somewhere, but I lost that potential on the way up. Well, that's the way it goes, right? I lost probably $1.50. I could have got maybe almost $2 if I had stayed with it and got the top. Could I have gotten the top? Well, I got volume off the top here. I probably could have got about a 75 out of it pretty easy. I traded out of this around 74 if I remember right. So, you know, left $1 on the table. That's what happens. I still can get it back down here, I think, and that's what I'm waiting on, and we'll see how it behaves as it comes back. And the reason for that is that was a multiple swing point breakout, multiple time frames. This would be the first foray back in this area if it comes back. If that's true, we should be able to buy it right at 73, right, and expect this thing to try to push higher. So that's what I'm looking at, and I think that's what you should be looking at as well. Okay, it's a little longer than usual. I'll leave it at that. Thanks, and I'll see you next time.